The secret of becoming a millionaire from the stock market. If you follow these 7 rules, you too can become rich. Hello friends, have you ever wondered how a person can become a millionaire by starting with just 5,000 rupees? You must have heard the name of 𝐟𝐨𝐥𝐿, who started investing with such a small amount and later became one of the most successful investors in the Indian stock market. But if making money from the stock market is so easy, then why do more than 90% of people suffer losses in it? What is the reason that most retail investors are out of the market in a few years, while some investors make profits continuously? After all, what is it that makes successful investors different from ordinary people? This is not a secret, but a well-planned strategy. To earn money in the stock market, only luck or coincidence does not work, but correct information, discipline and patience are needed. In this video, we will tell you about 7 such rules, by following which you too can earn crores from the stock market. If you adopt these rules seriously, then one day you too can join those 10% people who really make money from the stock market. But before that, if you are new to our channel, then please do not forget to subscribe to the channel, so that you keep getting updates of our every new video first. So let's start today's discussion without any delay. First rule: investing without understanding the stock market can be suicidal. Many people jump into the stock market without thinking. They buy shares of a company based on the recommendations of a friend, relative, or on TV, without knowing what that company actually does, what its business model is, and what its future may be. This is the biggest mistake. The stock market is a platform where your knowledge is your biggest strength. If you invest without understanding it, it will be like wandering in the jungle without a map. To understand the stock market, you must first know how stocks work, what the market trend is, and how companies are analyzed. Today in the digital age, thousands of videos and articles are available on the internet, from which you can get basic information about the stock market. Apart from this, if you want, you can also take the help of a good financial advisor, who will show you the right direction. Investing without proper education and research is not only harmful, but can also put your entire financial future at risk. Therefore, if you want to enter the stock market, first invest time and effort in understanding it. Second rule: always start with a small amount. Do not invest all the money at once. Becoming a new investor in the stock market does not mean that you invest your entire savings in it. This is a big mistake that most people make in the beginning. They get excited and invest all their savings in stocks, and when the market falls, they panic and sell their shares. This not only causes them losses, but they start fearing the stock market forever. So, always start with a small amount. If you have 1 lakh rupees, then instead of investing it all at once, start investing with just 5,000 rupees. Gradually, when you start understanding the stock market, then increase your investment amount. Another advantage of investing with a small amount is that even if you suffer a loss, it will not be so big that your financial situation gets spoiled. This will also give you a chance to learn and improve. Third rule: always buy shares of blue-chip companies. Do not fall in the greed of high returns. Another common mistake of new investors is that they buy stocks of bad companies in the greed of high returns. When a stock suddenly rises a lot, people start investing in it, without seeing how fundamentally strong that company is. The result is that when that stock falls, the investors lose money. If you want to make a safe investment, then initially invest only in the stocks of blue-chip companies. Blue-chip companies are those which have a good reputation in the market, which have remained stable for a long time, and whose business is growing continuously. These companies are less risky and give good profits in the long term. Gradually, when your experience increases, then you can also invest in other companies, but always start with safe companies. Fourth rule: stay in the market. Patience is the real key. If you want to make money from the stock market, you have to be patient. Many people get into the trap of making quick money, and when they do not get immediate benefits, they get disappointed and leave. But the truth is that only those who stay invested for a long time get real earnings from the stock market. The magic of compounding is seen in the stock market when you invest for a long time. For example, if you invested 1 lakh rupees and got a return of 15% on it every year, then after 20 years, your amount will become about 16 lakh rupees. This is the magic of compounding, which is available only to those investors who stay in the market with patience. Fifth rule: do not get into the trap of cheap shares. Evaluate the stock correctly. Many investors think that if a stock is only 10 rupees or 20 rupees, then it is cheap and investing in it can give quick profits. But this thinking is completely wrong. The low price of the stock does not guarantee that it will increase. Low-priced stocks often belong to companies whose business is weak or which are running in loss. Investing money in such stocks means that you are investing your hard-earned money in something that has no future. Therefore, always look at the fundamentals of any company. Check its balance sheet and only then invest. Sixth rule: do not panic in the fall, but see it as an opportunity. When the market falls, new investors panic and sell their shares, causing them huge losses. But if you want to become a successful investor, then you have to avoid this mindset. Big investors always see market decline as an opportunity. When the price of good stocks falls, they buy them because they know that in the long term, those stocks will rise again. So the next time the market falls, instead of getting scared, see it as an opportunity to buy. Seventh rule: invest some part of the profit in safe investment. It is not only important to make money in the stock market, but it is also important to save it. Whenever you make a profit, invest some part of it in safe investment, like fixed deposit, gold, or bonds. This will keep your money safe, and if there is ever a big shock in the stock market, you will not suffer much loss. So friends, if you follow these 7 rules, then you too can earn good money from the stock market. It is a slow but steady process. And if you invest patiently and wisely, then success is certain. If you like our content and want to make our efforts even stronger, you can support us through the QR code given in the video or the UPI ID given in the description. Your every small contribution is valuable to us and will inspire us to make even better and informative videos. Your support is our strength. Also, if this video taught you something new, or you felt that this information should reach others as well, then do not forget to like and share the video. If you have any questions or suggestions in mind, then do let us know in the comments. We look forward to answering your every question and listening to suggestions. And yes, if you want to stay updated with our every new video in the future, then subscribe to the channel and press the bell icon so that you get every new information first. GRT Business always strives to give you accurate and reliable information. Our news is obtained from various news agencies, public opinion, and public sources. We try our best to verify every report, but we are not responsible for any dispute or error. Our sole aim is to provide you with accurate and reliable information.